Assalamu alaikum students and a very warm welcome. I welcome you on behalf of ACCA on the fourth day of practice to pass webinar for the taxation exam UK variant. This is your tutor Saad Muhammad and the topic that I have selected today is value added tax. Like yesterday, my approach will be that we'll first be doing two OTQs because you know that one OTQ is expected from VAT out of the three. Then usually the section C question can be tested from VAT because section B first two questions will primarily be focusing on income tax and corporation tax. So I have therefore selected two questions that will specifically be focusing on VAT. And then I have selected another 10-mark question as I have shared with you in the last two sessions as well, that the examiner are encouraging the questions that deal on multiple taxation to bridge the gap between the ATX and the TX. And for that reason, they have selected the question number 3 as their favorite question because the first two questions will be focusing on income tax and corporation tax. So that will be our approach today. You can download the questions from the handout section as well as my notes are available in the handout section as well. The WhatsApp group link has been shared with the students already. However, if anybody wants the link, you can message in the question box and representative of ACCA will paste the link there. Now guys, before I move on, if anybody has any questions, they can ask in the question section. And I would like to raise all of you to raise your hands so that you can hear me clearly and you can see my screen as well. Okay guys, so let's move to the daily question planner first. I'll skip my introduction today because most of the students know me already and they have attended the first 3 days as well. So this is our plan today. Two OTQs from VAT, then three questions out of the first two will specifically be focusing on VAT and the third one is on multiple taxes. So let's start with the first OTQ of the day. The name of the question is Alyssa. It can be also found in the Kaplan's examination kit. Okay guys, so as I told you before that the best way to approach any OTQ question is to read the requirement first. So that I'll do so that I can know that what are the things that I'll be looking for while I'll be reading the scenario. From what date would Elisa have been required to be compulsorily registered for VAT and therefore had to charge output VAT on her supplies or services? So if it would have been an exam, and I don't know because here I know that I'm going to practice a question of VAT. But for example, if you are in an exam, so obviously you don't know that out of three OTQs, which one is the VAT. By reading the requirement, you'll be able to understand that this OTQ relates to which tax, IHT, CGT or VAT. So from there you can judge that this OTQ is related to VAT. And here it is a very common topic to be tested in MCQs, that is the registration of VAT. So I'll take you when we'll be solving this question to my notes to tell you that where I have mentioned about VAT registration test. So the second MCQ relates to what amount of pre-registration input VAT would Elisa would have been able to recover in respect of the inputs incurred prior to the date on which she registered for VAT. So the second question relates to the knowledge of the pre-registration input VAT, that has been specifically mentioned in the notes as well. We'll go through in a bit. The third one is what is the maximum amount of input VAT which you can reclaim in respect of the motor expenses for the quarter ended 31st March. Do remember that all of the input VAT incurred on the motor expenses can be recovered, including fuel. And there is no need to calculate the private part if the fuel has been used for private journeys as well as the business journeys while claiming the input VAT. So the motor expenses input VAT can be claimed even if the motor vehicle has been used for the private purposes. We will not time apportion the VAT. Then, how and when does Alyssa have to pay VAT liability for the quarter ended 31st March? So this MCQ I can even answer in isolation without reading the scenario. Why is that? Because I know that the rule of submitting the VAT return is pretty simple, that VAT normally accounts for the quarter. Whenever your relevant quarter gets end, you have to submit its VAT return 1 month and 7 days after ending the quarter. So if my quarter is ending in 31st of March, you tell me guys, when will I have to submit the VAT return? What would be the exact 1 month and 7 day date? Tell me in the question section, please. Now, which of the following items of information is Alyssa not required to include on a valid VAT invoice? Now, this question I can also answer in isolation without reading the scenario, because if I have a good knowledge about what are the things that are included in the VAT invoice, I can easily answer that. And now there is a topic as well called a simple VAT invoice and a detailed VAT invoice, which gets tested very commonly in your MCQ section and OTQ section. You should have a good knowledge that what are the amounts or the contents that are part of detailed VAT invoice and what are that are not included in the detailed VAT invoice. So guys, from these four options, the customer's VAT registration number, an invoice number, the customer's address, a description of the services supplied, which thing you think that should not be included in the VAT invoice? Do tell me in the question section, please. For the previous MCQ, Sajid Ali has answered, Sirisha has answered, and both of your answers are correct, guys. Sajid, I have shared my screen. You have to check your connectivity. Now, if I would like your participation, guys, in answering the last MCQ, which item do you think will not be the part of a valid VAT invoice? I can see there is a considerable amount of increase in the attendees since we have started, so that is good. But I'll be needing your participation to make this more engaging. Okay, I can see a couple of answers. Asma, your answer only is correct. That is customer's VAT registration number. Guys, do remember that supplier's VAT registration number needs to be on the invoice, not the customer's. Why? For example, if I am buying anything from someone, there is no need for my VAT registration number to be on that invoice. However, the person who is selling me the item is charging me the VAT as well. So his number needs to be there so I can confirm that he's not a fake registered person, he's a genuine registered person. And nowadays, it is pretty easy to identify, even in Pakistan as well and in UK, that if you buy from any of the registered suppliers, their VAT number needs to be on the invoice, and you can take their VAT number, go onto the HMRC's website, enter their VAT number there, and their name will immediately be popped up. So you can clearly check or verify that whether this person is a valid VAT registered supplier or not. Okay, because when I'll be claiming that output VAT and input VAT from HMRC, I need to provide that invoice as an evidence on which the supplier's VAT registration number should be mentioned. Obviously, on the invoice it should be mentioned that what is the type of thing that is being sold. So the description of items should be there, the date should be there. So the only thing that should can be there, but it is not compulsory to be that included in the VAT invoice, is the customer's VAT registration number. These are the small misconceptions, guys, that make you lose easy marks. VAT is one of the easiest chapter in your taxation exam. But the thing is, because of some key concepts that are very, very easy, and the students are confused about those key concepts, and they tend to make the mistakes in the exam by losing very easy marks. And then they come up and say, sir, we don't know what happened in the exam. That is what happened in the exam. You don't know the small details of the taxation rules. And when you went into the exam, you made these silly mistakes, and you think, for example, you're quite sure, okay, I'm pretty sure that this is the correct answer. That is pretty easy. But what is actually happening? You are answering the wrong option. So I'll tell you to focus on tiny details, especially in the VAT. It is one of the easiest chapter. You do not have to get into nitty-gritties or technicalities into VAT. It is very basic, and my notes will hopefully help you. Now, as you remember that the first three MCQs, the first deals with the VAT registration, the second deals with the VAT on pre-registration input VAT, and third deals with the VAT on motor expenses. So let's revise these topics from my notes first, and then we'll read the scenario. There you can see there is a chapter in my notes called value added tax. In that you can find a heading called VAT registration. There are two types of VAT registration: compulsory and voluntarily. For voluntarily, obviously it is your discretion, so there is no criteria. Whenever you want to, you can register for VAT with HMRC. The advantage of that will be that on whatever items you are suffering input VAT, you'll be able to recover that. And the disadvantage is that you now have to charge VAT on your taxable supplies. So if I am selling something that is taxable by nature, but I am not registered for VAT, I am selling it for, let's say, 100 rupees. But now if I registered for VAT, I have to charge 20% VAT on that. So my item will become of 120 rupees. Now, if my customers are VAT registered as well, they don't mind whether I charge them the VAT or I don't, because they will claim it. They themselves are VAT registered as well. But if my customers are not VAT registered, they will be really unhappy because the prices of mine has suddenly jumped up by 20%. So one of the things that you have to decide in voluntarily deciding that whether shall I register for VAT or not is check that what are the type of your customer. Are they VAT registered? If they are, they will not mind at all of you getting registered for VAT and charging them the VAT. However, if your customers are end consumers that they are not registered for VAT, so they will have to suffer the VAT, they cannot reclaim it. So they will complain obviously that the prices have been suddenly gone up, and they're gonna look for the alternative, making you uncompetitive. Now, as I was telling you that for voluntarily registration, there is no limit and you can register whenever you want to. However, there is a compulsory registration threshold as well, that when you cross a certain limit, it is compulsory for you to get registered for VAT with HMRC. Now, what is that compulsory limit? It is 85,000. If your turnover exceeds 85,000 at any given time, you have to tell HMRC. Now, obviously, there can be two scenarios if we speak practically in real life. That obviously one might not know that when their sales will go up or cross the 85 threshold. So what they have to do is they have to keep checking themselves after every month, that for the last 12 months, are their sales exceeded the threshold or not? And how to do that? After every month, calculate your total sales of the previous last 12 months and check whether they crossed 85,000 or not. For example, in the first 12 months of my business, I will add the 12-month sales and check whether they are 85,000 or not. And now, if let's say if they are not, it means I do not have to register for VAT. Now, From now onwards, what I'll be doing is that for every exceeding month, I will add 1 month and I will deduct the last month. For example, the month 1 I will deduct and the month 13 I will add, because at any given time I have to check what are the last 12 months revenue. Okay, so deduct 1 month from the very start and add 1 month from the very last, and keep checking that whenever you cross the threshold, let HMRC know. This type of test is called historic test, that you keep checking yourself because you don't know when you're going to cross the threshold. So whenever you came to learn, what is the deadline to notify HMRC? Whenever you came to learn, you have to notify within the 30 days of the end of the month in which the limit is exceeded. For example, if my limit is exceeded in, let's say, October, on 2 of October I came to learn. So I have to inform HMRC by 30 days of the end of the month in which the limit exceeded, that is 30th October. The registered the registration will get effective from first day of the second month. That is, let's say if I have notified HMRC, or my deadline to notify HMRC is 30th October, my registration will get effective from 1st November. That is one day after the deadline in historic test. And effective date of registration is very important because that will be the date from which you are liable to charge VAT to your customers. Before my effective date of registration, I will not be liable to charge VAT to my customers even if I have notified HMRC. So for example, in the month of October, I have notified HMRC that I have crossed the threshold. But my first day of effective registration is 1st of November. So I'm not liable to charge my customers the VAT before my effective date of registration. However, I can if I've received the VAT registration number from HMRC. Whenever somebody registers for VAT with HMRC, HMRC allots them a VAT registration number. Now, this gets very confusing for the students because it gets tested very commonly in the exam, and the students always select the wrong dates. So do remember that first the deadline will end, and after the next day of the deadline you'll get effective for the VAT registration. Now let's talk about future test. This is very practical and can happen in real life as well, that I may came to learn that I have received a very big order, and I now know that if I incorporate that order into my last 12 months sales, I will cross the threshold. So I came to learn in advance. For example, I have recently signed a very big contract with some of my customer, including which crossed my threshold. Now in future test, you came to learn before the time that you're going to cross the threshold. In that case, in the month in which you came to learn that you are going to cross the threshold, you have to inform HMRC before that month gets end. For example, if I've signed a contract on 3rd of February with a customer, and it is a very big contract, and I know that after signing this contract, my threshold will cross the 85,000 threshold. It does not matter when I actually sell the products. What matters is when I came to learn, when I have signed the contract. The actual sales takes place does not matter in this case. So I came to learn on 3rd February that I have signed the contract, and now my sales will going to increase or cross the threshold. Now I have to inform the HMRC by the end of that month, that is 28th of February. 28th of February, because the February is of 28 days. If it would have been a month of 30 or 31 days, whatever the last day of the month, that would have been my deadline. Now, in future test, do remember this important difference between the historic test. The effective date of registration will be the first day of the month in which you have informed the HMRC. So in my example, I have informed the HMRC on 2nd of February. So I came to learn on 2nd of February. So my deadline was 28th February. My effective date of registration will become 1st February, the first of that month. However, in historic month, what happens is that you will not be liable to charge until you get effective, and that is that first your deadlines gets end, and then after 1 day of that you gets registered or effective become effective for VAT registration. But in future tests it's the opposite. You are liable from the very start of that month. And why does HMRC do that? For example, if I've signed a contract and if HMRC says that okay, now you will become liable from 1st of March, what would have happened? If I have made the sale of that contract that I have signed in 2nd February, like on 26th or 7th of February, I would not have charged VAT. And VAT is the income of HMRC. Do remember that VAT is a type of tax that you are just an agent of collection. You collect the VAT from the customer and you pass it on to HMRC. That is your job when it comes to VAT. However, other type of taxes, you pay them and you suffer them as well. For example, income tax I suffer on my incomes, so I pay it out of my pocket. CGT I pay out of my pocket and I suffer it. Okay, inheritance tax I suffer. Corporation tax the companies suffer and pay from their own pocket. However, VAT is a sort of tax that you just collect from customer, not from your pocket, and on the other hand pay to HMRC. So do remember that HMRC is very possessive and strict about VAT because it is their income which you are just supposed to collect. So I hope that VAT registration is quite clear now to all of you guys. So by raising your hands, do let me know that if you have understood it clearly, and it will not cause any confusion from now onwards. Very few raised hands. Come on, guys. I need your participation. Thank you. Okay. Now let's talk about the pre-registration input VAT. What is the pre-registration input VAT? Guys, the pre-registration input VAT means the input VAT that I as a customer has suffered before getting myself registered for VAT. Because if you are a VAT registered person and whenever you suffer input VAT, you always claim it from HMRC. But what about that when you were not VAT registered and you were buying something or getting some services and you were getting charged VAT on that and you were being suffered with input VAT, and because at that time you were not registered, so you were unable to recover the input VAT. Now you have registered for VAT. Is there any possibility that you can recover the VAT that you have suffered when you were not registered? The answer is yes, and HMRC has made these rules to encourage people to get registered for VAT. So they know that whenever we register the VAT, register for VAT, we'll not only be able to recover the input VAT in future, but we may be able to recover the input VAT that we have suffered in the past when we were not VAT registered. Okay. However, there is a limit or a specific rule about that, that for all of the goods or assets for which you have suffered the input VAT, they must be within they must be bought within 4 years before the date of registration, number one. And number two, they should be with you in your ownership at the date of registration. What does it mean? For example, if I bought something 3 years back and I've sold it as well on few years back as well, it means that on the date of registration, it is not with me. It is not in my ownership. I'll not be able to claim its input VAT. However, if I would have bought it 3 years back, but it would have been in my ownership, I would have able to claim the input VAT on that. Although I have bought it 3 years ago. But the rule is that not only you have bought within 4 years, but you must have in your ownership as well. That is for the tangible goods and assets. For services, the rule is different. It is that if you have purchased or received the services within last 6 months of the registration. So for services, the rule is that they must have been received before 6 months. If the services are more than 6 months old, I cannot recover the input VAT. And obviously, because services are intangible, they are consumed whenever they are received. So for them, it cannot be that they must be in your ownership or they must be in your stock. So that is why for services, the only criteria is they must have been received in the last 6 months. So guys, are you clear? Raise your hands quickly so I can move to the question. Okay. There is a very important need to emphasize on these topics because all of the MCQs and questions that I'll be doing with you, they'll keep asking these topics and keep testing these topics. And when it comes to VAT, the exam is pretty repetitive. The exam keeps testing the same type of topics. So if you have a good amount of knowledge for these topics, you'll be able to score very easy marks. And do remember, apart from 10 marks, that is one OTQ from VAT, you must have 3 to 4 MCQs as well in the 15 MCQs that are part of your section A. So do remember that out of that, even if it is not gets tested in section C, there must be at least 14 to 16 marks of paper that will be tested from that. So let's move back to the question. Now, now I can start reading the question. The following scenario relates to question 1 to 5, and I do remember that the first OTQ, the MCQ asked me about when shall the ELISA gets registered, the second asked me about the pre-registration input VAT, and the third asked me about the motor expenses. So let's start. ELISA commenced on trading on 1st January 2020. Our sales since commencement have been as follows. From January to April 2020, 7,500 per month, then 10,000 per month, and then from September 15,500 per month. So I can see that at some point of time she will cross the threshold of HMRC of 85,000. So the first question asks me that when shall she gets registered. So let's quickly calculate. For May to August, it is 10,000 per month, so that will be 30,000. I'll multiply 7,500 by 3 and then let's add 30,000 and let's see what will be that amount to check whether it will cross in August or not. So 7,500 times 3, that is 22,500 plus 30,000. So that is 52,500. So she has not crossed the threshold till August 30th August. So let's add September now. So not in September, not in October, but surely in the next month, in the next month she has crossed. Now guys, what do you suggest? What will be the correct answer? In which month did she cross? In September she didn't. In October she didn't. For example, my answer was 7,500 times 3 plus 30,000. That was my answer till August. Now you tell me that by adding 15,500 and if I multiply it by 2, it becomes 31,000. So if I add 31,000 in that, even still, she does not cross the threshold. So obviously, if she does not cross the threshold in September and October, she'll cross the threshold in November. Okay? Now you tell me the answer in the handout section, or in the question section, sorry. Quickly, guys, I need the answer. Guys, you were failed to highlight that the information was not available for 3 months. The information was available for 4 months. And you will be surprised that the examiner comments I was, you know, seeing that the students are so sure that the information is normally for the quarter that they keep multiplying it by 3. The information is for 4 months, so every time it has been given from January to April, it becomes 4 months. So I should suppose to multiply it by 4 rather than 3. That is I want to tell you, and you guys were confused that the answer should be C, but why my answer is not correct. So now it will be changed. 7500 will be multiplied by 4 now, plus 40,000 it will be, because the information is for 4 months. Now you can see that on 31st August, she has reached 70,000. So surely when I'll add the sale of the September, she'll cross the sale on September. If I add 15,500 for you guys, 85,500. So total sales till 30th September 2020 will be 85,500. Now you tell me, add 30 days in that. What will be the date if I add exactly 1 month in that or 30 days in that? Come on, guys, I'll be needing an answer. Quickly add the deadline, that is 30 months, 30 days, and tell me that what will be immediately the next day of the deadline. Yes, Sajid, you're right. The 1 month and 1 day. Okay. So you have to add 1 month and 1 day in that. So if I'll add 1 month, it will be 30th October or 31st October, and one day will be 1st November. So the correct answer is B. Thank you. The correct answer is B. Now quickly raise your hands if you have understood that how I have applied the historic test here. Quick, guys. It is a very important topic and I need to confirm that you guys have understood it. Now, only those students should raise their hands which didn't knew and were confused about these tests but now understood. Raise your hands. Okay, it's good to see that many of the students already knew about these tests, and it for you guys it is a asset for you that you are already aware of these topics. Now, moving on. The above figures are state exclusive of VAT. ELISA only supplies services and these are all standarded for VAT purposes. ELISA notified our liability to be compulsory register for VAT by the appropriate deadline. For each of the 8 months prior to the date on which she registered for VAT, ELISA paid 240 per month inclusive of VAT. Guys, if anybody can tell me in the question section what is the quickest way of deducting or taking out the VAT from VAT inclusive amount? Quickly, guys, what is the quickest formula? Yes, Asmart, just simply divide the figure by 6. Obviously, Sajid, if you simplify the equation 20 by 120, it will result in 1 by 6. So the simplest way or the quickest way to calculate the output VAT or the VAT from the VAT inclusive amount is to divide that amount by 6. So if you quickly want to take out the VAT from 240, just divide 240 by 6 and you'll be calculating the VAT. Now, for each of the 8 months prior, she have incurred for this. I guess this relates to the second MCQs that she was talking about the pre-registration input VAT. So let's say paid 240 per month inclusive of VAT for website design and 180 per month exclusive of VAT. Obviously, for the figure that is exclusive of VAT, to calculate the VAT, it is pretty easy. Just take the 20% of that. For advertising, both of these suppliers are standard rated and VAT for VAT purposes and relate to Alyssa's business activity after the date when she registered for VAT. So guys, you tell me how much VAT she can recover for the services. all I shall do is I shall take the VAT from this figure and from this figure. For this figure, I have to take 20% of that, and for this figure, I'll divide 240 by 6. Quick guys, I'll be needing the answer. Sajid, your answer is correct. Alyssa paid 240. So as this service includes the VAT, so I'll keep it as it is. However, I have to divide that. So 240 divide by 6 to calculate the VAT. It is 40 per month, and she's paying that for 8 months before the registration. But the problem is that only for 6 months it is allowed. So I'll multiply it by 6 only, because for 6 months it is only allowed. So that is for website design. Do remember the figure, it's 240. Now let's calculate for the advertisement expenditure. It is 180 times 20%, because that figure was exclusive of VAT. Again, she's paying this for 8 months, but only 6 months it is allowed. So I'll multiply it by 6. So 216 plus 240 of website design. 456 is the correct answer. That is D. Asma, your answer was wrong, but have you now understood what is the correct answer? It is only available for 6 months. Do remember that I've told you for services, although she's been paying it for 8 months, but as per the rule, it is only available for 6 months. Okay. So one figure. Now look, the examiner has tested two topics here. That do you know that how to calculate the VAT out of VAT exclusive figure and to calculate out of the inclusive one? And the second topic that he has tested is that do you know that for services it is for 6 months? The rule is, because the students normally gets confused in 4 years and 6 months. 4 years for goods and assets, tangible items. For services it is 6 months. I hope it clarifies. Now, what is the, okay, I have to read the question again. After registering for VAT, Alyssa purchased a motor car on January 2021. The motor car is used 60% for business mileage during the year ended 31st March 2021. Alyssa spent 456 on repairs to the motor and 624 on the fuel for both her business and private mileage. The relevant quarterly scale charge is 290. All of these figures are inclusive of VAT. Now you tell me guys, what I have told you, that when calculating the motor expenses, VAT can be recovered on all amount, or do I have to separate the private mileage? Quick, all VAT or apportionment? Answer me in the question section. More answers please. So the correct answer is all amount. Asma, that is what I want to teach you, that scale charge is for output VAT. There is no such use of scale charge while calculating the input VAT. The students gets confused all the time when to take the scale charge, when not to. The scale charge is only for calculating the output VAT on fuel, because what happens is, Asma, listen to this carefully. HMRC allows you that whenever you buy or purchase the fuel, you do not know at the time of purchasing the fuel that out of that fuel, how much you'll be using your business for your business journeys and how much for your private journeys. So at the time when I bought the fuel or purchased the fuel, I suffered the input VAT and I claimed all of the input VAT. So there is no such use of fuel scale charge. Now, HMRC says that you have to return us the input VAT that you have wrongly claimed for your private journeys. So return us that input VAT as an output VAT. And for now, how do you calculate the output VAT that you have to return to HMRC? You calculate the output VAT on fuel scale charge. Fuel scale charge is always a VAT inclusive amount that is given to you in the exam. Do remember that. Take out the output VAT of fuel scale charge, just divide the fuel scale charge by 6, and that's it. Now, Asma, you tell me, here the question is asking me about the input VAT or the output VAT? The input VAT. Okay. Now, so the fuel scale charge doesn't matter here. It is just to confuse you. So what you'll do is you'll add both the repairs and the fuel, because as they both are the VAT inclusive service, and divide them by 6. Okay, so that I'll do here. I'll open my calculator and I'll add both figures. One was 456 and the other was 624. Now I'll divide them by 6. 180 is the answer. And you tell me, guys, what shall I write here? 180, obviously. Okay. So I know that for the boxes, it is one of the most difficult questions because you have a no clue whether your answer is correct or not. But if you have basic knowledge of few concepts, you won't go wrong. So 4 and 5 we have done already. And do remember that the VAT registration, the deadline for submitting the VAT return is always 1 month and 7 days after the end of the quarter, and it should always be submitted electronically. The VAT return shall always be submitted electronically, and the payment liability, the payment of VAT liability is the same as with the return deadline. That is, the payment and return both needs to be submitted to HMRC after 1 month and 7 days of the end of the relevant quarter, and the return should be submitted electronically. So for 31st March, obviously the answer is B, electronically by 7 May 2020. Now, the question number 5 or the MCQ number 5 we have done already. So guys, before I move on to the next OTQ, I want to raise your hands that you have understood it completely. Now, let's get back to the OTQ number 2. This OTQ also deals with VAT, obviously. So before starting reading the question, I'll read the requirements as usual. In which month did theater exceeded the VAT threshold for compulsory registration? Again, you can see that the question relates to the registration date. But here I have to tell the exact month rather than the deadline. So the method that I have taught you will be used. That first we will add the first 12 months and see whether he crossed the threshold in first 12 months. If not, then we'll add another month from this last and subtract 1 month from the start. Now, the second requirement deals with what amount of pre-registration input VAT was theater able to recover in respect of the expenditure incurred prior to registering for VAT on 1st January 2020. Again, guys, the same rule will be used. That is, if these were the goods or assets or the tangible items, it if they were bought in the last 4 years and are still in the ownership of theater, the VAT can be recovered. If they are services, then the last 6 months only. The next one is, within what VAT period must theater issue a VAT invoice after making a standard supply, and for how long must these VAT invoices normally retained by the theater? So guys, you tell me that in how many days the VAT invoice should normally be issued? after making a standard rate supply. For that, I do not have to read the question. This can be answered in isolation. Quick guys, I need more answers. In how many days? Now, for that, there's a topic called tax point in my notes that can be found. And tax point tells you the time at which VAT should be charged and the duration. So I'll take you there. Now, there you can see there's a basic tax point and then there is an actual tax point. The basic tax point is pretty simple and as per common sense that you must charge VAT when you have delivered the services if they are services, and if they are goods, when you have delivered the goods. But now, if there is any amendment, then it is replaced by the actual tax point. What is actual tax point? First, you have to identify that what is the basic tax point of the item, and that is if they were goods, it should have been the delivery date, and the services the performance date. Now, you have to see that is there any advance payment received, or you have issued the invoice in advance. If any of this happened, then you have to see that if your answer is no, then BTP is your tax point. It does not change. If the answer is yes, then BTP will be replaced by the actual tax point. What is actual tax point? You shall charge the VAT earlier of if the payment has received or if you have issued the invoice. I'll make it a bit easier for you. For example, if there is no advance payment or no advance issue of the invoice, I have sold something to Mr. A. The order has been received on 12th of January and the goods were delivered on 16th of January. So when shall I charge VAT? 16th of January. However, when the next time he places the order to me, he said, Saad, I was pretty happy with your services last time. So this is my order and I am paying you in advance. Now this happens in the month of February. This happens on the month of February, and on 5th February, he not only placed the order but paid me in advance as well. Now I have delivered obviously the goods after certain time. For example, let's say I have delivered the goods on 10th of February. But as the payment has been received in advance, now I will not be charging the VAT on 10th of February. Rather, I'll be charging the VAT on 5th of February because I've received the payment in advance. Or if I have received the payment in advance, or if I have issued the invoice in advance. Any instance out of these two happens earlier than basic tax point, then that will be your tax point to charge the tax. Now, why HMRC has made these rules? Because the problem is that if the VAT needs to be charged in this quarter, then its VAT should be submitted to HMRC in this quarter. What people try to do is they try to deceive HMRC. For example, if I have received an order on the third last day of the quarter, let's say my quarter runs from January to March, let's say, and I've received an order on 28th of March. Now, if I deliver the goods on 22nd of April to my customer and I intentionally late the delivery, let's say, I can take this VAT to the next quarter, even though the customer will pay me after certain days, but I do not have to pay the VAT of this quarter to HMRC after the quarter ends, and even after 1 month and 7 days have elapsed. I do not have to pay the output tax that I've collected from the customer to HMRC. I can use HMRC's money. So that is why HMRC has made such rules that if I would have received the advance payment on 28th of March, then this order would have belonged to the last quarter. If not, and I have not issued the invoice in advance as well, then this have fallen in the next quarter and the payment needs to be made in the next quarter. So that is why these rules exist, to make sure that in which quarter the sales fall and in which quarter the output VAT of that sale needs to be submitted to HMRC. So that's why these rules exist. In the absence of these rules, the rule is not 14 days, Asma. The rule is 30 days. That after receiving the order, you should issue the invoice to the customer within 30 days. Okay. However, if, for example, in normal circumstances, I have received order, but I have told customer that the goods are in progress and it will take certain amount of time to produce the goods, so he has to wait. Okay. So now, as I have told my customer that he has to wait, HMRC will ask me that when you've received the order, have you issued the invoice within 40 days? 14 means 1 4, guys. 14 days. If my answer is no, I have not issued the invoice in 14 days, then HMRC says that whenever you deliver the goods, that is your basic tax point, then charge the tax. That is this. However, if I have issued the invoice in 14 days, then my invoice date will become the date on which I shall record the VAT. And I told you why these rules exist, to make sure that your sales fall in which quarter so that the VAT of that can be submitted to HMRC. I hope this clarifies. So, in the absence of these rules, the rule is to issue the invoice in 30 days. So that I know, if I go back to the question, that the answer will either be B or C, because VAT invoice should be issued within 30 days. For how long shall I keep the records for VAT invoices? Anybody can tell me? 6 or 4 years? Because the answer can either be B or C. Yes, all of you are right. 6 years is the correct answer. So obviously, without even reading the question, I can tell you that the correct answer is B in this case. So the answer is B. Now, moving on to the next requirement. Why will VAT default or penalty interest not be charged on TDS underpayment of 1200 for the quarter ended 30th September? So he might have done some mistake. We have to check that whether the interest needs to be charged on that or not. But there is a separate section in my notes that tells you when shall the mistake be penalized and when shall not. I'll take you to the notes to the relevant section, which tells you, and that part calls VAT administration. Okay, I guess I have to take you from my advanced taxation notes. There it is. It includes the MTD as well. I'll tell you what MTD is. It is the new change in the Finance Act. It will be tested in the question that I'm doing. So guys, this tells you a chart that explains that whether error should be penalized by HMRC or not. So I'll come back to this chart when we're done with the question, because otherwise it will become confusing for you. Now, the last requirement for the quarter ended 31st March, what is the amount of non-deductible input VAT in respect of entertaining UK customers and leasing out of the motor car? So guys, I'll stop here and I'll ask you that, do you know the rule that can the VAT be recovered if you spend some money on the entertainment of UK customers? Okay, guys, so I'll change my question. Can the VAT be recovered if I spend on the entertainment of overseas customers? Yes, you are right, guys. By entertaining UK customers, you cannot recover the input VAT. However, if it would have been overseas customers, we were able to recover the VAT. You are correct. Now, the second thing, it has asked me about the leasing cost of the motor. If you take lease of motor car and obviously you pay the installment of the lease, how much of the cost is allowable and how much of it is disallowed? It is a straightforward rule. Thank you, Gitin. Your answer is correct. Anyone else? Guys, 50%. Sajid, the answer is if you have taken the car on lease, the 50% of the lease cost are disallowed as far as the VAT is concerned. Okay. So do remember that the rule is straightforward. So when we'll be starting the question, we know that what are the exact amounts, but I think the correct answer will be either A or D, because in that the entertaining UK customer states zero. So the answer will either A or D. Whenever you're reading an MCQ or a NotiQ, first filter out the incorrect options so you are not get confused and you're more focused that out of these two one should be the correct answer. And I think might be D should be the correct answer, because after disallowing, the lesser amount should be the correct answer, but I cannot be sure until I read the question. So let's go back and read the question now. Theatre commenced trading on as a builder on 1st January. She voluntarily registered for value added tax on 1st January. So she immediately registered for VAT as soon as she started the business. So all I have to tell is that even if she would not have compulsorily registered, in which month she must have crossed the threshold. So let's start in month 1. Standard rated supplies are this and zero rated are this. Then for second, third, fourth, fifth, and I have been provided the data for the first 15 months. Now it is bit time consuming as I have to manually add all of the sales of the standard rated and zero rated and see that in which month will it cross the threshold. I will request you guys only to calculate the total of the first 12 months of the standard rated sales for me and the first 12 months of zero rated sales for me. So if you guys can please calculate the total from month 1 to month 12 for the standard rated side and for month 1 to month 12 for the zero rated side, and answer me the question section please. Thank you, Sajid. I have the answer of the standard rated, guys. So if you guys can calculate the zero rated for me, please. The first 12 month sales for the standard rated are 57,100. Joel, I want you to calculate or to add this zero rated side section figures for the first 12 months. Quickly, guys. The standard rate I have 57,100. I need the total of 0 rated. Thank you, Sajid. It's 27,300. I have calculated myself. It is 27,300, not 24,700. So I'll open the spreadsheet and I'll discuss with you that what to do from now onwards. So let's open a spreadsheet. Okay guys, so I can write here that I can make two columns. Here I'll write my figures. These are my standard rate sales. These are my zero rated sales for the first 12 months. That is 57,100 and 27,300. Okay. Now, if I add them till now, it becomes 84,400. It means I have not crossed the threshold in my first 12 months. Now, for every exceeding months, what I have to do is I will add 1 month from the last and I will deduct 1 month from the start. So let's do the half and half screen so that it becomes easier for us. Okay guys, now I can see the question as well as my spreadsheet. So the last month will be 28. So I'll write taxable sales in last 12. Taxable sales in last 12 will be this obviously, plus or add month and less month. By adding month will be the last month, 2800 and 900. So what I'll do is that the month that I have to add is 2800 plus 900, and the month that I have to deduct is, I'll put a minus sign intentionally just to keep my figures negative, should be the first month, that is 3400 in my question. I'll copy this formula, that is take this, add this and add this. Again the answer is 84,700. I have not crossed the threshold of 85,000. I'll copy this. Now 84,700 my sales. The month that I have to add is now the 14th month, that is 3,200 plus 1,700. So I'll add here 3,200 plus 1,700. And the month that I have to deduct should be the second month because the first I have deducted already. So it is negative 1,900 only. 87,700. Now guys, have I crossed in the month 14th? This is the month 14th that I have added in the last. Have I crossed the threshold in the month 14th? Tell me in the question section. Yes. Thank you, Gitin. You have calculated before me. That was good. Thank you, Maha. So let's get back to the question, guys. The correct answer should be option A, that is 14. So I will suggest you, if there is such type of MCQ that takes a lot of calculation and it is worth 2 marks as well like other MCQs, attempt it in the last. Do answer the easy ones that does not include that much of a strict calculation or a tricky calculation. So do the ones that are easy first and then come back to this. Okay guys, so we are done with that. Let's talk about the pre-registration expenditure, with which I guess the second one deals. Theatre paid for the following. Let me zoom out the question for you. Okay, theatre paid for the following standard rated services prior to registering for VAT on 1st January 2020. On 10th June 2019, he has incurred this service, so you can calculate yourself that from 10th June till 1st January, have the 6 month elapsed or not. For 8th December 2019, I can clearly see that the months have not elapsed and he has incurred 300 on advertising expenditure. So advertisement is obviously a service. It cannot be a tangible asset. So for this 6 month rules must apply. Both figures are exclusive of VAT, so I can take 30% if any of those is eligible. Theatre paid for the advertisement of 300 by cash, and she does not have any evidence of this transaction such as VAT invoice. So guys, you tell me, for one, I think the 6 month period has elapsed, and for one, he does not have the VAT evidence or the VAT invoice available. Can he claim out of these two any input VAT? Sajid, why? Does he have any evidence for the one, the 301? How will he prove HMRC that he have suffered this input VAT? He does not have any proof. Although it is within 6 months, but he must have any evidence. So guys, the answer is no evidence. That's why one has elapsed the 6 month period. For one, he does not have any evidence. So the answer will be, the correct answer will be 0. That is option D. Okay. So you can clearly see that this MCQ has taken less than half time of what the first MCQ would have taken. So if I were the student, I'll immediately leave the first MCQ, try to solve the others, and then come back to the first one. Okay, guys. Now, coming back, for the VAT quarter ended. VAT for the quarter ended 30 September 2022. Theta was filed by the submission deadline of 7th November 2022. So he has submitted the 30th September quarter VAT return within time, and the related VAT liability was paid on time, and the liability has paid on time as well. However, on 15 February 2021, Theta discovered that the amount of VAT was understated by 1200 as a result of incorrectly treating a standard rated sale as zero rated. Okay, so he has made a mistake which was not deliberate. Given that the underpayment does not exceed 10,000, Thader is permitted to correct this error on the VAT return for the quarter ended 31st March 2021, and this is what she will do. Thader will file this VAT return by the submission deadline of 7th May and pay the related VAT liability, including this 1200 as well. Now guys, first of all, I have to understand that what this 10,000 is. Secondly, what if one makes any mistake which is not intentional? What do they have to do? So for that, I'll take you to the chart that I have here. If you have made any errors in your return, what matters is that, has it found by HMRC, or were you discovered your error yourself? If you discover your error yourself, you have to check that is it your error the greater of two limits. One is specified and fixed and it is called de minimis limit. It is 10,000. And the second you have to calculate yourself because it varies for everybody. It is 1% of the turnover. Whatever your sales revenue is, take 1% of that. So obviously, if the 1% of your turnover is less than 10,000 for you, the limit is 10,000. Now you have to see that the error that you have made is above the de minimis limit or below the de minimis limit. That is what the question was telling about, that the error is below the de minimis limit, that is 10,000. Now, if the error is below the de minimis limit, what you should do is you can include it in the next VAT return and tell HMRC. If the error is above the de minimis limit, you should separately notify it to the HMRC that I have made an error which is of such significant amount that it has crossed my de minimis limit as well. It is the discretion of HMRC that they charge you the interests or they don't. It is the discretion of the HMRC. They can accept your mistake or they may not accept your mistake and they charge you the interest, and they may charge you a penalty as well, but it is the discretion of HMRC. And they can charge you a penalty for submitting incorrect VAT return as well. Now the interest is on the VAT that you have not submitted to HMRC and you have submitted it late. However, the penalty is for submitting the incorrect VAT return. So penalty is sort of a fine, and interest is that you have hold the money of HMRC and you have paid the money of HMRC to HMRC late. That's why you will be charged. Now guys, you have seen here that the error that has made by Thedder is below the de minimis limit. So that is obvious that we are not going to notify HMRC separate. What we can do is we can include it in the next VAT return. So let's get back and see that what the MCQ has asked. MCQ has asked, why will VAT default on penalty interest not to be charged on Thedder's underpayment of VAT of 1200 for the quarter ended? A, because Theder corrected the error of 12 months. B, the error was not deliberate. C, the separate disclosure of the VAT underpayment was not required. And D, Theatre paid the underpayment of 1200 by the submission deadline of May 7, 2020. Guys, what do you think? Which is the correct answer? For all of you who have answered B, the chart, while I was telling you the chart, it does not states anything that has to deal with the deliberate mistake or the mistake made by yourself. So there is no criteria or segregation on the deliberate or indeliberate mistake. The segregation is between if the error is above 10,000 or below 10,000. The interest is only be charged if the error is above 10,000 and only then the separate notification is required. If the error is below 10,000, the separate notification is not required and the interest will not be charged. So the correct answer here will be C, that interest will not be charged because separate disclosure of the VAT underpayment is not required, because interest gets only charged when a separate disclosure is required. However, guys, do remember the penalty is same whether you notify HMRC separately that because the error is above 10,000 or you don't. The penalty will be charged. There you can see that the penalty is consistent in both circumstances. It will be charged. However, interest will only be charged if the error is above de minimis limit. So the correct answer is C. So guys, quickly raise your hand if you have understood. Now, okay guys, so let's read the remaining question. VAT return for the quarter ended 31st March 2021. Thedar is currently completing her VAT return for the quarter ended March 30/31 and is unsure as to how much input VAT is non-deductible in respect of two items. I guess it deals with the last MCQ. During the quarter ended 31st March, Thedar spent 800 on entertaining UK customers. We all have discussed that this will not be allowable. During the quarter ended, Thedar leased a motor car at a cost of 700. The motor car is used by Thedar and 75% mileage is for private journeys. First of all, I would like you to tell me that after calculating that what VAT shall be recovered in total, shall I have to separate the private impact and the business impact? I know, Azan, that will take half of the amount, but will we separate the business impact and the private one? No, Asma, you're correct that whenever we are talking about motor expenses, we do not segregate or time a portion according to the business proportion and the private. So all we do is that we calculate what will be the total VAT. These figures are exclusive of VATs. It means that I have to calculate the VAT myself. So let's calculate the VAT first. 700 times 20%, that is 140. So half of that will be 70. It means, what is the correct answer, guys? Now I will also take you to where I have mentioned that what VAT can be recovered and what cannot. If you come into my notes, here I have mentioned about the input VAT. Input VAT on entertainment expenses incurred for employees and overseas customers is recoverable. However, input VAT on entertainment expenses incurred for suppliers and UK customers is irrecoverable. Now let me tell you one point on which none of you has gave attention. It asked me what is the amount of non-deductible input VAT, not the amount of deductible input VAT. And all you were telling me that what is the amount of deductible input VAT. However, it would have been the opposite. So the non-deductible input VAT will be obviously the half and the whole of the entertaining UK customers. So the correct answer will not be D. The correct answer will be rather C. So guys, that I was telling you that you tend to ignore few little points due to which you're unable to take marks however you know the complete concept. So do carefully read the questions. It was asking you about the non-deductible input VAT, not the deductible one or not the claimable one. Okay, so the answer here is C rather than D. Okay guys, so now if you can raise your hands that who have understood the OTQs completely. Azan, it is just given for confusion that 75% is private or 25. We ignore the private usage. Quickly raise your hand, guys, that you have understood. Okay, thank you. Thank you. Okay, guys, before moving on to the section C questions, we'll have a 10-minute break and I'll join you at 3:30 or after 10 minutes. Meanwhile, you can keep posting your questions. I'll answer them after the break. Okay, guys, so let's continue. Raise your hands to give me a go ahead that you're ready. Quickly, guys. Okay, so let's start. The question that I have selected is Garfield. It is a March June 16 question, can also be found from the Kaplan's examination kit. So, as usual, let's read the requirement first and then we'll continue. Calculate the amount of value added tax payable by the Garfield for the quarter ended 31st March 2021. Okay, then give a brief explanation of making tax digital MTD and state whether it applies to Garfield's business or not. So, guys, the second requirement can be answered without reading the question, but I will stop and wanted to ask all of you, do you know what the MTD or the making tax digital is? Those of you who know, raise your hands. No student has raised hand till yet. Does anybody know that what MTD is? So only one student has raised hands. Just to confirm, now all of those students who don't know about MTD, raise your hands. Okay, guys, so let me tell you what MTD is. You can find it also in my notes as well. It is basically a new initiative of HMRC. By making the tax digital, they are now elect making digitalness and the taxation or the taxation system, that they're trying to make everything in the form of electronic, so they do not have to wait for or to for checking the records. They do not have to go through any discrepancy. It also makes their system efficient. What they have done is basically they have tried to link their computers with yours, and they have requested you that you have to use certain softwares to not only maintain your records but also to calculate and to submit your tax returns. So previously what was happening, you can calculate your taxation in whatever software or whatever paper or manually, however you want to calculate your tax, you were allowed to. And after that, all you have to do is you have to go onto the HMRC's website. There you can find an electronic form. You just have to fill that form using your tax details, and you can submit that electronically. Now what is happening is HMRC has first told you that there are only specific set of softwares that can be used to prepare the tax return. So that now you're not allowed to use any of your choice software. So there are certain software that are approved by HMRC. In those software, you'll not only maintain the records, but you also use those software to submit your tax returns to HMRC. The unapproved softwares cannot submit their tax returns to HMRC, so therefore it is compulsory for you to buy compatible softwares. Okay, the people who are compulsorily registered for VAT, there on them there is a compulsion by HMRC that they have to maintain their records digitally as well. They cannot maintain their records in the hard form. However, the people who have registered for VAT voluntarily, they have to submit the tax return through software. That is same for both. However, it is not compulsory for them to maintain their records digitally. So they can maintain their records in the hard form as well. The ones who have registered voluntarily. Now, guys, you tell me. The question has asked me that will it be compulsory for Garfield's business or not? So you tell me when it will be compulsory for Garfield business, if she has registered voluntarily or compulsorily. in the question section, guys. Quickly, guys, I need answers. Yes, Maha, you're right. They will be liable to submit or keep their records digitally if they are registered compulsory. So for that, I have to read the questions to check that whether she has registered compulsorily or voluntarily. Okay. Now, moving on. Let's get back to the question. I'll zoom the question for you. In the first requirement, I have to calculate the VAT payable by Garfield. So Garfield has been registered for VAT, and since 1st April 2014, Garfield was previously completed his VAT return himself, but for the quarter ended 31st March 2021, there are some items for which he is unsure of the correct VAT treatment. Now, Garfield partly completed VAT computation for the quarter ended 31st March. Is shown below. All of his completed sections on the computation are correct, with omissions marked as outstanding. So the figures that are given in the question, we have to assume that they are correct, and the ones for which the OS is mentioned, for them we have to calculate the correct figure ourselves and then have to include in the section. So for sales, all standard rated, the VAT is 22,500. This is the output VAT section. For discounted sale, I have to read note 1. For equipment, note 2. The fuel scale charge is already here given, that is 60. Input VAT purchases all standard rated. For motor car, the answer is 0. For equipment, I again have to read the note 2, and for impairment losses, I have to read note 3. For entertainment of customers, I have to read note 4, and for motor expenses, I have to read note 5. Before reading the question, I know two things, that for motor expenses, the VAT can be recovered in full. There is no need to segregate the private usage. For entertainment, the UK customers will obviously not allowed. However, if there is any overseas customers treatment, it will be allowed. And the question has mentioned themselves 0 as for UK customers. So for overseas customer, whatever the VAT will be, I will claim. Unless otherwise stated, all figures in the following notes are stated exclusive of tax. So unless stated that it is inclusive of tax, I'll assume that it is exclusive of tax, and I'll take 20% of the figure to calculate the VAT. The first is on discounted sale. For discounted sale, before I read the question, I'll tell you the rule. The rule is that there are two types of discounts. Early settlement discount, which we called cash discount, or there are other discounts called trade discounts. Now, what is the difference between early settlement cash discount and the trade discounts? Guys, trade discounts mean that I have an offer that if you buy two products, you have to buy on full price. However, if you buy four products, I'll give you a 10% discount. That is what trade discount. That if you trade more with me, I'll give you a discount. So your discount is dependent upon the trade. If my order has been decided with you, for example, you opt for that you'll buy four products. So it's obvious that I'm gonna give you the discount now. It does not matter that when you will pay me. The VAT on the invoice will be calculated as the total price less 10% discount, then whatever the value is on that, I will calculate the discount. However, for cash discount, the policy usually is to encourage your customers to pay you earlier than their normal due date. So the cash discount will be like that: if you pay me in 30 days, that is your normal due date, you have to pay me in full. However, if you pay me within 15 days, I will give you a 5% discount. Now the problem is that if I sell anything to you, I have to issue an invoice to you as well. but I do not know that whether you will be paying me in 15 days and claiming the discount or not. So that's why when the VAT invoice needs to be issued for the very first time, it will be issued on the full price. And it will only be modified if you pay me within 14 days. If you pay me within 14 days, I will send you an adjusted invoice. Okay. However, for the first time, the invoice that will be issued will be the full. So the difference between the trade and cash discount is, for trade discount, you're obvious that you're giving the discount and it will remain the same regardless of the payment date. But for cash discount, you're unsure whether the customer will claim and pay you early or not. So in discounted sale, do remember, if the customer pays you within the due date, only then you take the VAT on the discounted amount. Otherwise, you take the VAT on full amount. So before reading the question, I would like everybody to raise their hands that they've understood this point. Okay, guys. Now coming back. On 10th February 2021, a sales invoice for 4,300 was issued by Garfield in respect of a standard rate supply. To encourage this previously late paying customer to pay promptly, Garfield offered a 10% discount for payment within 14 days of the date of the sale invoice. The customer paid within the 14-day period. So obviously, as the customer has paid within the 40-day period, now the VAT will be calculated on the discounted price. The invoice has not been taken into the account in calculating the VAT figure of 22,500. That is this, the total 22,500. Okay. And this is the only sale for which Garfield has offered a prompt payment discount. Now you tell me, guys, it is mentioned in the question that this 4,300 is VAT inclusive, exclusive. What will be the amount of VAT that should be recorded as output VAT? First of all, what shall I do is, let me check that what will be the discounted invoice. So he's offering a 10% discount. So 4,300 times 90% to see that what will be the value of the invoice after discount. It is 3870. Now let's take 20% of this amount to see what will be the amount of output VAT payable. It is 774. So I'll open the spreadsheet along with that as well, and we'll start solving our question as well. So I'll write here that this question is Garfield. This is part A of that. Here we have to calculate output VAT. And after leaving certain cells, I can write input VAT here. Then you have a choice to copy the figures from the question in your exam. So rather than writing yourself, save your time and copy the data from the question. Let me teach you how to do it. All you have to do is just click on the sales. For example, I want to copy sales. Right click, select copy, come into your sale and select paste. Same I'm gonna do with discounted sale. Rather than typing myself, I will paste it there. Many of the students ask me, sir, how can I manage the time? How can I manage the time? I always, out of time when it comes to section C. So guys, these are the techniques. Your examiner has also told that it is perfectly fine to copy the figures, and he allows this and he recommends this to copy the data from the question rather than wasting your precious time in the exam. So I'll keep pasting here all of the amounts. Now for input VAT, I will also copy the data purchases. Then it is motor car. Then we have equipment. Then we have impairment losses. Then we have entertainment. I'll copy entertainment. Then beneath that, I can bold that and I can select two figures. UK customer, I can copy underneath, and overseas customer, I can copy underneath. Again, I'm telling you, do copy the data from the question. It save a lot of time rather than you typing all of the things. Especially the figures that are given to you in the question, I'll copy them from the question as well. You can, rather than doing this, press the Control C for copying and press the Control V for pasting function as well. Okay. Now, what I'll do is, rather than calculating the total output VAT myself, I'll write here total output VAT and I'll apply a sum formula SUM, open the face of the bracket till here, whatever it is, just add it. And same I'll do for total input. I'll open a bracket with sum formula and select all of the data from here till here. Now, VAT payable should be slash, if the answer is negative, then it's refundable, equals to output VAT minus input VAT. So now all I have to do is just follow the question and all I have to do is just put the figures that are missing. However, I'll put the figures that are given to me in the question. So sale is given, then purchases are given, fuel scale charge is given. I can copy the fuel scale charge here. Now, no other amount has been given to me except zero of motor car. So I can put a zero here and zero of an entertaining UK customers. These are the figures that were given into the question. Now, before I start the question, I would like each and everybody of you to raise your hands to let me know that you have understood how to solve the questions on the spreadsheet using these short techniques, copy the data, apply the formulas, and this is what I want you to do. Raise your hands quickly. Now tell me in the question section, did you find it helpful? Post your answers there. Now, coming back, let's start the next point. I have discussed the point one. So what I can do is I can solve here the discounted sale bit. So let's calculate the discounted sale bit that I've already solved. I'll tell the examiner my calculations in the bracket rather than making a working separately. So what I'll do is I'll write that what I have done is I've taken 4300, I've multiplied by 90%, and then multiplied by 20%. So that examiner know that how I have calculated. I'll do the same here by opening a bracket, 4300 static 0.9 or 90% times 20%. Close the bracket. 774 it is. Now for equipment, I have to check the second point. During the quarter ended 31st March, Garfield acquired some new equipment at a cost of 12,400 from a VAT registered supplier situated in European Union. So he has not bought equipment within the UK, he has rather bought the equipment from somebody in the European Union. I want to clarify an important point here, that although that we all know that the UK has now left the European Union, but the examiner has clearly stated that the papers till March 2022 will assume the rules to be the same as last year, and we will not be getting tested by the Brexit rules, that is Britain leaving the European Union. So we will assume that the rules were as like before. And what are the rules? To remember that, open my notes and look for the overseas aspects of the VAT. In there I have mentioned that if you bought outside the European Union, sale or purchase, what happens? If you buy from within the European Union, what happens? There you can see. So within European Union, if you purchase anything, what you have to do, for the supplier, it will be a zero rated supply, but I am here in the question is the customer. So what do I have to do for the customer? For the customer, I have to account for output VAT on my VAT return on the standard rate. Then the VAT suffered by me could be reclaimed by me in the same quarter. So that is what we call reverse charge procedure. Reverse charge procedure means you first charge yourself 20% VAT, and in the same quarter immediately you claim that as an input VAT. So the net effect upon you is zero, because first you charge VAT yourself as a 20%, then you reclaim. Let me tell you how does this work in real life. Whenever you import something from European Union and you go onto the port to clear your machinery or whatever the item is, on port you pay 20% duty to HMRC as an import duty. Then you come back and in the very next quarter you claim that 20% duty from HMRC. So this is how it works in real life. However, on paper, all you have to do is whenever you buy something either from European Union or outside the European Union, the treatment is similar. You have to add 20% of that amount in your output VAT and claim the same 20% in your input VAT. So I'll get back to the question and my spreadsheet. So the amount of the sale of the equipment was 12,400. So what I'll do, all of the figures that stated in the question are VAT exclusive. So I'll take 20% of that included in the output VAT and then included the same figure in the input VAT as well. So I'll tell examiner how I have calculated that. It is 12,400 times 20%. So here I'll open the bracket, 12,400 times 20% to 480. Okay, and in the equipment here I'll write the same, but I'll put negative with my equals to sign so the figure can become negative. Now let's move on to the next, motor expenses. Sorry, entertaining first. During the quarter ended March 2020, Garfield spent 960 on entertaining overseas customers. This figure is inclusive of VAT. So guys, we have spent 960 on overseas customers. We have discussed that in the last question, that if you entertain overseas customers, it is allowed and we can recover the VAT. And as the figure is VAT inclusive, to calculate the VAT out of that, I'll divide the figure by 6. So entertainment of UK customers is there. Overseas customers, I'll mention examiner that what I have done is I have taken 960 and divided it by 6. The same I can do here, equals to 960 divided by 6. That is 160. However, if you can put minus with the start of your formula, it will make the figure negative as well. Now, moving on to the next, motor expenses. The motor car purchased on 1st January 2021 is used by Garfield 60% for business mileage during the quarter ended 31st March. I told you in the last OTQ that we do not take the element of private usage. It is only for confusing the student. Garfield spent 1008 on repairs on the motor car and 660 on the fuel for both his business and private mileage. Both of these figures are inclusive of VAT. So guys, as I told you in the last question, that for motor expenses including fuel, we do not take the element of private usage while calculating the input VAT. So I'll take 1008, that is spent on motor expenses, plus the value of fuel, that is 660, and I'll divide that by 6 that I told to my examiner. I'll copy the same by clicking and copying, and here I'll put an equals to sign and I'll paste my formula as well. And before, I'll press a negative sign. Okay, so the thing that I should have done is that this divide by 6 should be out of the bracket. Otherwise, it will not recognized by the spreadsheet. 278. Okay, 278 will be the complete input VAT that will be recoverable on the motor expenses. Now, Garfield does not use the cash accounting scheme, the annual accounting scheme, or the flat rate schemes, but has read the use of these schemes can be beneficial for small businesses such as his. Garfield would like some information on making tax digital. He is aware that the system has been implemented by HMRC and would like to know more about it, whether it is relevant to small businesses or not. So I will be telling Garfield that yes, it is relevant for the small businesses. It is relevant for the businesses that are registered with HMRC for VAT purposes. However, if your business is compulsorily registered for VAT, in that case, you will have to keep your records digital as well as submit the returns digital. However, if not, then you'll only have to submit the return digitally, but you should not keep your records digitally. It is not compulsory for you to keep your records digitally. So out of all the notes, I have only left with the impairment losses. And for impairment losses, I would first like to tell you the rule by taking you to my notes. That what is the rule for impairment losses? VAT accounting, output VAT, okay guys, now here I have clearly written in there that if impairment losses or bad debt happens, there you can see impairment losses and bad debt happens, bad debt or impairment relief. What happens is that, let's say I have sell someone an item on credit and he has requested me so that I can give him extended credit period of like 60 days, let's say, and I've provided him the 60 days credit period that he can pay me after 60 days. But because the sale was at the end of the quarter, after 1 month and 7 days, I have to pay HMRC the output VAT of all the sales that has been made in the quarter. So I have paid HMRC the output VAT of that sale as well, for which I not even have recovered my own money. For example, if I have sell something to someone that is worth of 100 plus 20% VAT. So in this 120, 100 is my money and 20 is HMRC's money. But what if that I haven't recovered 120 completely and I paid HMRC the 20 out of my pocket as well because the customer has not paid me. And later on, that customer becomes bad debt. So now what I have to do, I have not only unable to recover my money, but I've also paid the output VAT on that sale from my pocket to HMRC. Now what to do? HMRC allows you that if the customer went bad debt and you have paid his output VAT from your pocket, you can claim the output VAT of that bad debt sale from HMRC back. However, there is a criteria. The criteria is whatever the due date is, whatever the due date of the payment is, 6 months must have been elapsed after the due date, not from the date of sale. Do remember, from the due date. For example, if I sell him something on, let's say, 31st March, and the due date of the payment is after 60 days, that is 31st May. So the 6 months should have elapsed from 31st May. When the 6 months have elapsed, then whatever the quarter is coming next, in that quarter you can claim the output VAT from HMRC by making it as an input VAT in your VAT return. So you can claim that back. But the condition is that 6 months must have been elapsed from the due date. So remember that. So before I move back to the question, have you guys understood that? Raise your hands. Okay, thank you. Ma, if you were asking about the motor expenses, why I have divided motor expenses by 6, the reason is that it is mentioned in the question that motor expenses and fuel figures were VAT inclusive. So I have to take out the VAT from them. They were not VAT exclusive figures. It was mentioned. That's why I divided by 6. Now let's get back to question, guys. In the question, on 31st March, Garfield wrote 3 impairment losses. The first was for 1400, of which the invoice date of was 30th July and the payment due date was 29th of August 2020. So if I check from August 2020 till March 2020, I can see that the 12 months have been elapsed. Okay, because from August is the 8th month of the year, and if I add 6 months in that, it will become second month of the next year, that is February 2020. So in February 2020 the 6 month period have elapsed, and we are talking about the quarter ended 31st March. So yes, he can claim now the input VAT of that 1400 because the 6 months have been passed from the due date. So as the figure will be considered to be VAT exclusive, because it is not mentioned that it is VAT inclusive, I'll take 20% of 1400. So this one is recoverable, and whatever my answer is, I'll include it into my input VAT. You should not be confused that where should you record the input VAT impairment losses. It is mentioned in the question that he has taken them in the input VAT. So it is obvious, even if you don't know the concept, that he is deducting it in the input VAT. The second is 2700, for which the due date was October. The October is 10th month, and if I add 6 months in that, the exact 6 month will elapse on 12th of April, which is after my quarter ended. So I will not be able to recover the input VAT on this sale because the 6 month period has not yet elapsed. However, in the next quarter I can claim, because in the next quarter the 6 month period will be passed. And obviously the last one is even after that, and for that I will not be able to recover as well. Both can be recovered in the next quarter, but not in this quarter, because the 6 month period has not yet elapsed, so I have to wait for 6 months. Now if only the first one can be recovered, I'll go into my input VAT section, and in front of input I'll tell examiner that I'll write 1400 times 20%. I'll copy this, press equals to sign, press a minus sign, and press this formula. Okay, the Excel sheet does not accept X, so you have to replace that with steric. That is 280. Now, as we are done with that, I'll make sure by checking that have I dealt with every omission. Discounted sale I have dealt with, equipment I have dealt with, and I have also included the input in output and in the input. For fuel scale charge, it was given in the question. Now, Asma, I want to answer one of your question. If the fuel scale charge would not have been mentioned in the output VAT already, you have seen that in the input I have calculated the input VAT on fuel. For fuel, I've told you that when it comes to recover the input, you can recover in full. However, you have to return the input VAT on fuel in the form of output VAT called fuel scale charge. It is normally given in the question, and here you can see it is given in the question. So that is why the private element of the fuel has been returned to HMRC in the form of fuel scale charge by adding it into the output VAT. The purchases I have dealt with, motor equipment done, then impairment losses done, and the customers and motor expenses are done as well. So my total input VAT and total output VAT has been calculated. Now I have to edit my formula because it says minus this. I will rather add plus because one figure is positive and one is negative, so that it can calculate the VAT payable or refundable. As the answer is positive, it means the more amount of VAT is output and the less amount of VAT is input. So that is why the net VAT is payable by Garfield towards HMRC. If you have more input VAT rather than output VAT, then you claim the refund from HMRC. How do you claim the refund? When you submit the VAT return, there is a section in which you can enter your business account details. In that, HMRC process your refund. And if you have to pay the VAT while submitting the VAT, there is a section called payment on which if you enter, you can enter your bank details or card details, with the help of which you can pay the VAT liability to HMRC in the process of submission of VAT return. So guys, with that, I have solved a complete question that provides us a better insight on all of the VAT's major concept. I've also told you about the MTD, that is the new addition into the finance act, so you should expect that it may get tested. Then there are certain common mistakes that the students does normally make. I have tried to tell you those as well. Now, if there any question, you can ask in the question section. Asma, the equipment is included both in output and input VAT because it is bought from outside the UK. That is, we have bought them from European Union. Whenever we buy anything outside the European Union, you have to account for output VAT on that as well as input VAT. I've explained this earlier on. If you have missed, kindly visit the recorded lecture. Is there any other question, guys? Azan, impairment loss is pretty easy. All you have to do is, if you want to claim the input VAT on the impairment loss, you have to wait for 6 months after the due date to claim that. Motor expenses is pretty easy, Azan. You are allowed to claim input VAT on motor expenses completely. You have to ignore the private mileage. So whatever the motor expenses is, get its total. If it is VAT exclusive, multiply by 20%. If inclusive, divide by 6, and all the figure is claimable. Yes, impairment are same as bad debts, Joel. Impairment here is the same as bad debts. Any other question, guys? Shahzad Rahman, please state your question again. Yes, due date for impair. No, not due date. Due date means that, let's say if I have sold something to someone and he has not paid me for that sale. Let's say this sale is for 1000 and the VAT on that is 20%, that is 200. So he has not paid me my money, and the output VAT, but I have paid HMRC the output VAT from my pocket. So HMRC says that if the sale becomes bad debt, you can claim the output VAT from us that you have paid from your pocket, but you have to wait for the 6 months after the due date, and the due date shall be set by the business, whatever the business has set the due date. In my case, the example I have given, it was 60 days. So I have to wait for 6 months from that due date, not from the sale date. Okay, guys, so we'll take a 5 minute break and we'll continue after 5 minutes the next question. Okay, students, so let's start. So raise your hands and let me know that you're ready. Quickly, everyone, we are back. Okay. Now, the next question that I have planned for you is Smart Limited. So I'll zoom the question. We'll read the requirement first. State giving reasons, the date from which Smart Limited was required to register for VAT, again, the registration test, and by when it was required to notify HMRC of the registration. So we have to tell the effective date of registration and our deadline as well. Both things we have to tell. So let's see whether it is a future test or a historic test. State how and when Smart Limited will have to submit its VAT returns and pay any related VAT liability. So guys, for that, I do not have to even read the question. The answer is pretty straightforward, that Smart Limited will have to pay the quarterly VAT returns after the end of the relevant quarter, 1 month and 7 days. Okay. And it should be submitted to HMRC electronically along with any VAT liability. That is the straightforward answer to this question. For this, I'll suggest you to select a word processor option and then answer this type of questions in bullet form. Then let's talk about C. State the circumstances when a VAT registered business like Smart Limited, which is not using VAT cash accounting scheme, would still have to account for output VAT at the time that payment is received from a customer. Now, it is a pretty tricky question. Let me tell you in easy terms that what he is asking. What happens is normally the people who are registered with HMRC for a VAT cash accounting scheme means that they will not be following the accruals concept. They will rather be following the cash concept. That is, they will account for output VAT only when the customer has paid them the actual money. Only then they will pay the output VAT portion of the sale to HMRC. And they will reclaim the input VAT only when they have paid their suppliers. However, in accrual concept, what happens is HMRC says that if the sale has taken place in the relevant quarter, regardless of whether you have received the payment or not, you have to pay the VAT or at the output VAT to us from your pocket. And but the advantage is even if you have not paid to your supplier, you can claim the input VAT as well. So there is one disadvantage and there is one advantage. So he's asking that apart from cash accounting scheme, there is another situation in which the same treatment applies. What that situation is? Now I'll tell you what that situation is. I have told you that if the customer pays you in advance, if the customer pays you in advance, then you have to account for the VAT when you have received the payment from the customer. So it is one another instance that if the customer has paid you in advance, your basic tax point will be replaced by the actual tax point, and therefore the payment on which you have received will become the date on which you have to account for the VAT. So this is a pretty straightforward answer to this part of the question. Now, in part D, I have to advise Smart Limited as to why it should be beneficial for the company to use the VAT cash accounting scheme. The cash accounting scheme is normally beneficial for the people who consistently deals on credit with the customers. So it is better for them to go into the cash accounting scheme with HMRC or register in the cash accounting scheme with HMRC. Why is that? Because if they register with HMRC for cash accounting scheme, they will only have to pay the output VAT to HMRC when they receive the money from the customer. So the bad debt relief will become automatic. Why? Because if the customer will not pay you, you will not pay the output VAT to HMRC. So you do not have to wait for that 6 months that we have discussed in the above question. But to qualify for VAT cash accounting scheme, you know that there are certain conditions that are written into my notes. I can take you to the notes and tell you that the cash accounting schemes are there. Cash accounting scheme, annual accounting scheme, flat rate scheme. Above that, there is a complete description of these accounting scheme along with their criterias as well. For example, for cash accounting scheme, you can only join if your taxable turnover is less than 1.35 million, and you have to leave the scheme when your turnover exceeds 1.6 million. So if your turnover is below these limits, you can join the HMRC scheme. If not, you have to leave the scheme. So there are certain other conditions as well, which I'll not go into right now. But that what I have told you, that for which people the normally these schemes are beneficial. These are beneficial for the people who excessively deals on credit. So we have to check that if Smart Limited deals with their customer on credit, it is beneficial for them. However, guys, there is one disadvantage, that you will not be able to recover input VAT till you pay your suppliers. Okay, so do remember that this is one disadvantage. So we'll look into it while reading the question, that whether Smart Limited is be benefited by the cash accounting scheme or not. So coming back, Smart Limited commenced trading on 1st September 2020, and the company's 4-month sales for the first 4 months are this: 26,700, 47,000, and then 134, and then 1113. I guess she would have surely, or he would have surely crossed the threshold in November 2020. On 1st November, the company signed a contract valued at 86,000 for completion during the November 2020. So guys, here the company has came to learn in advance that they are going to cross the threshold. Because if you see, if I add 46 plus 47 plus 26, that is the turnover first 2 months, they do not cross the threshold. But on 1st November, they came to learn that they are signing a contract of 86. So it is obvious they have crossed the threshold on 1st November, and they came to learn in advance. So guys, you tell me, when you came to learn in advance, or when you are able to know in advance, future test apply or the historic test apply? Obviously the future test apply. So the guys, the deadline is usually the 30 days of that month in which you come to learn, or the next month, same month or the next month. Same month. Thank you guys, you're right. So for Smart Limited, what will be the deadline if they came to learn on 1st November? What will be the deadline? Right, 30th November. Yes, you guys are right. And now, guys, he has also asked me that what will be the effective date of registration. In future test, is the effective date of registration is one day after the deadline, or the first month of that month? So 1st December or 1st November? Effective date of registration, 1st November or 1st December? No, Shazad. 1 month after the deadline is for historic test. For future test, it will be the start of that month. What does the effective date of registration mean? It means the date from which the company is liable to charge VAT to their customers. So the company will notify HMRC by 30th November. The legal process will complete few days even after that. So it does not matter when the company will receive the VAT number from HMRC, they are liable to register, they are liable to charge VAT from 1st November. And whenever you register with HMRC for VAT, the document, your sale tax document or the VAT registration documents come to you in the post and by email as well. On that, your VAT number is mentioned and it is clearly mentioned that what is your effective date of registration. It is mentioned on that document. So you guys, you have to register by 30th November, but your effective date of registration will be 1st November. Okay. So you will write in the answer that Smart Limited came to learn about they are crossing the threshold on the start of the month. That's why future test apply and they have to notify HMRC by the end of that month, that is 30th November. However, their effective date of registration will be start of that month, that is 1st November. So you guys are correct. Okay guys, so we are done with the first part. The second part I have told him already, that as to when the VAT returns needs to be submitted. All of the figures are stated exclusive of VAT. Smart Limited only supplies services that are standardized. Smart Limited allow its customers 60 days credit when paying for services and is concerned some customers will default on payment of their debts. The company pays its purchase invoices as soon as they are received. So guys, what is happening with Smart is that their customer don't pay them immediately. They pay them after 60 days, but they pay their suppliers immediately. Smart does not use either VAT cash accounting scheme or annual accounting scheme. So guys, you tell me, by the look of the nature of the Smart Limited's business, is it better for them to go into the cash accounting scheme or not? Better or not? Why? Because their customer pays them late. If they go into the cash accounting scheme, they will not have to submit the output VAT to HMRC till their customer pays them, and the bad debt relief will become automatic. But they can claim the input VAT immediately because they pay their customers immediately. They don't delay their suppliers. So yes, it is beneficial for them. They should get registered with HMRC for this scheme. So with that, this question is completed as well. I hope this question has also helped you. In this question, I have tried to cover the future test as well as the other points, like when it is beneficial for you to register for certain schemes and when it is not beneficial for you to register for certain schemes. Now guys, let's move on to the last question of the day. We'll have a quick 2 minutes break only before this question and then we'll start. Meanwhile, if you have any questions, you can post them. Asma Smart Limited is a question of past paper. You can also find its answer in the Kaplan exam kit. Okay, guys, shall we start? Raise your hands, please, if you're ready. So the last question of the day is Kagan. It is from September December 19 attempt. It is also available in the CBE format as well on the ACCA website. However, that has not been updated to the Finance Act 2020. That is why I am not solving this onto the CBE platform. However, there are certain past papers that are available on the CBE platform, but some of them are not updated to the latest Finance Act. However, some of them are updated. I'll tell you that where you can find the questions, because I will suggest you that even if they are not updated, you can have a good idea by solving them about the live exam. After the question, I'll take you there. So let's read the requirement. As I told you yesterday as well, that daily I have tried to select a question which the examiner nowadays is trying to test, which deals on multiple type of taxes, and it is for 10 marks. So Kagan again is a type of a question that deals on multiple type of taxes. Yesterday I have covered a question called Dembe. It was for 10 marks as well. It dealt with income tax, CGT and IHT, all three taxes. Today I have selected the question called Kagan, and this deals on multiple taxes as well. So try to practice these type of questions. If you want to ask, sir, how can I find that these are the questions on multiple taxes? These are the questions that can be found in Kaplan Kit. And when in Kaplan Kit, you open the start context of the kit in which you can find that there are certain questions. You can see that there are more than one question in income tax section or the CGT section of the same attempt. So it is obvious that if the section A has tested a question, section C has tested a complete 15 mark question of income tax, and you can see that there is another question on income tax as well that is tested in the same attempt, obviously it will be a 10 mark question. And that 10 mark question will not necessarily be tested on only income tax. It must include some other type of taxes as well. So I'll recommend that you go through the questions in the Kaplan kit and find out the questions that are of latest attempt but are of not 15 marks. So you can find out that there are some questions, few of which I have selected to discuss with you, that deal with multiple taxes. And in your question or paper, I do expect that the 10 mark question will be surrounding against different taxes. Okay guys, so let's read the requirement of the question. Calculate Kagan's revised income tax liability for the tax year 2018-19 if he retains the inherited shares. Now, this requirement has not been updated. It is 2021 actually. So do remember that the question has been upgraded. However, the requirement has not been. So we are going to calculate the revised income tax liability for 2021. It is for 1 mark, so obviously it will be some straightforward calculation. There will be no trick involved. We'll see when we read the question. Explain why or no little capital gains tax liability will be payable if Kagan sells some of his inherited shares. Now the question is providing us the hint that Kagan will either does not incur any CGT liability or very little if he sells the shares, but we have to think why. We have to think why. But that's for sure that the question is giving us hint that if he sells shares, he will not incur any CGT or very little. Okay, then the third is calculate Kagan's revised income tax liability. Again, this is for 2021 if he sells some of his inherited shares and makes the 4 alternative investments. Okay, for this part, you are expected to produce full income tax computation. You should indicate by the use of zero of any items which are not taxable. So this is the part for which I have to make complete computation. So that's it. Let's read the question. The scenario relates to four requirements. You should assume that today's date is 4th April 2020. On 2nd April 2020, Kagan inherited some of the quoted and ordinary shares valued at 510. So he has inherited those shares. Following the death of his aunt, Kagan is unsure whether to retain the shares or sell some of them in order to make some alternative investments. Guys, I want to stop here and tell you a key point. Whenever you inherit something, because you have not purchased that item, you have inherited that item. So there must be some rule as to if you sell it in the future, what will be your cost, because you have not purchased them. Your cost will be the market value on the date on which you have inherited. It is also known as probate value. Probate value means market value at the death of individual on which you have inherited the gift. So you tell me, if Kagan has inherited the shares valued at 510 on the death of his aunt, what will be the cost for Kagan from now onwards? Tell me in the question section. Obviously 510, because it is the probate value. From now onwards, it will be the cost for Kagan in the CGT competitions. So that is why the second requirement has asked me that explain why little or no capital gains tax will be payable if Kagan sells some of his inherited shares. So if Kagan sells some of his inherited shares on the same day, or after a small period of time in which the shares does not receive any significant revaluation, then he might not be able to pay any CGT. So let's read the question further to make sure that what is happening. Kagan is unsure whether to retain the shares or sell some shares in order to make some alternative investments. Kagan is aged 61 and is additional rate taxpayer. So I will recommend him to sell the shares immediately because he will be taxed at 28%, being a high rate band payer. Prior to inheritance, his taxable income consists entirely of employment income, which was 400,000. Now that's a huge amount of employment income. He was not even entitled to personal allowance because his income is way above 125,000. The income tax liability on his income for the year ended would have been 165,600. So the question has calculated his income tax liability considering his employment income is 400,000. That I do not have to calculate. Prior to receiving the inheritance tax, Kagan's chargeable estate for IHT purposes was valued at 1.7 million, and IHT of 550 would be payable if he were to die in the near future. Okay, so we now know that what about his IHT estate and IHT payable. Retain the inherited shares. If Kagan simply retains the inherited shares, then he will receive dividend income of 15,300 during the tax year 2021. This is in addition to his employment income of 400,000. Okay. Second is sell some of inherited shares and make four alternative investments. Fine. Kagan is considering selling some of his inherited shares for which there has only been a minimal increase in the value since he has inherited them, to fund the following four investments, all of which will be made at the start of the tax year 2021. So kind at least I can stop here and answer the first part of the question, that because the shares have received a minimal increase in the value since the Kagan has inherited them, if he sells them, he will not be able to pay any CGT if his annual exemption for the tax year is available. If his annual exemption of 12,300 is available, this minimal gain may not result in any CGT, or if any, it will be not that much because the shares have received a minimal increase in their value. So one requirement can be answered. Then there is another requirement that asked me specifically calculate Kagan's revised income tax liability if he retains the inherited shares. If he retains the inherited shares, it is clearly mentioned that he will receive a dividend of 15,300 on top of his 400 income. So the tax liability till 400 has been given to me. It is 165,000. Now guys, you tell me, if he received the dividend, he is an additional rate band taxpayer. If he receives the dividends being an additional rate tax band payer, how much tax he has to pay on this 15,300? What is the percentage of tax? Tell me in the question section. What is the rate of dividend for additional rate band payers? Yes, you guys are right. It is 38.1. Basic is 7.5. Higher is 32.5. But he is additional. For him, it will be 38.1. So we have simply calculated that his tax will be 15,300 times 38.1%. So guys, am I missing anything? You're right, Azan. The NRB, yes, 2000 NRB. You're right, Asma. The first 2000 of the nil rate band, whatever band you are pay, regardless of your band, it is available to you. So we will deduct 15,300, 2000 from 15,300, and then multiply 38.1%. And whatever the answer is, we'll add that in 165,000. So let's calculate this, guys. So 15,300 minus 2,000 will be 13,300 times 38.1 equals to 4953. And if I'll add that in 165,800, 170,753 will be the answer. So guys, are you with me till here? Understood? Any questions? Okay, moving on. For the second part, the last part only, for which I have to calculate or produce the complete computation, that is for the four alternative investment plans. Kagan will make a Kagan is considering selling some of the shares, for there has been only a minimal increase to fund the following four investments. All of four will be made at the start of the tax year. Kagan will make a gross personal pension contribution of 100,000. Kagan is a member of pension scheme but has not made any contributions in the recent year because his income has been substantially lower. He therefore has sufficient unused annual allowance to cover pension contribution of 100,000. So we do not have to calculate the personal annual allowance because it is mentioned in the question. So guys, what will happen if Kagan contributes 100,000 in gross personal pension contribution? We do not have to gross it up. What will happen? Quick answers. What will happen if he? Yes, Malik Shahab, you are right. His bands will be extended. His bands will be extended. Both the basic and the high rate band will be extended by how much amount? 100,000. Now, however, this will not have any impact on his incomes. His income will remain same. Now, next, Kagan will immediately draw 25,000 of the pension fund tax free. This is the permitted 25% tax lump sum free sum. However, no pension will be taken out during the tax year 2021. So guys, if he will take out 25% out of his pension fund, do you know the rule that all the money that you submit in your pension fund over the year of your life, whenever you retire or even before you retire, you are allowed to take out 25% of the sum of that money after a certain period of time as a tax free lump sum. The earliest you can take that money is if you are older than 55 years. So you can see here that in our question, Kagan is 61 years old. So yes, he is above that 55 years age. So he can withdraw the money from the pension fund. Whatever the total value of your pension fund is, the first 25% is always tax free available if you want to withdraw it as a lump sum. So guys, you tell me, if he will draw this amount, this 25,000 should be included as an income or not? No, no, Shazad, no, because it is tax free. It is mentioned in the question, it is tax free lump sum amount, so it will not. Now, we will write it with the help of zero because it is mentioned in the question that write all the amounts that are not subject to tax as zero. So I will write that as a zero. So let's open my spreadsheet and start solving the question along with reading the question. So guys, for him, I'll start with his employment income that is mentioned in the question. So I'll write here Kagan employment income, or I told you to you can copy from the question as well, so I can copy it, the amount as well. Now, if you do not want pound sign, you can manually type. It is your choice. Now, the employment income was given into the question. There is no such other income till now. However, I have seen that I have to increase the band. But pension fund withdrawal I can write with the help of zero. That I have studied till now. Okay, the next is Kagan will invest 50,000 in premium bonds. The expected amount of premium bond prices which will be received during the tax year 2021 is 700. So guys, you tell me bond prices are taxable or not? Quickly guys, bond prices are taxable or not? No. Gaming and betting wins and bond prices are exempt from UK tax. You guys are right. So I will show it with the help of zero. Okay. Now, Kagan will invest the maximum permitted amount of 20,000 in ISA savings account. This will pay interest of 400. So guys, ISA interest is taxable or not? No, the ISA interest is not taxable. You're right. Now, I will show that with the help of zero as well. Moving on. Kagan will purchase a freehold property of 295,000. The property will be let out unfurnished with Kagan received the property income of 9600 during the tax year. So property income is guys obviously taxable. So we'll write property income and we'll write 9600. So that is right. Now, after making these four investments, Kagan will be left with 65,000 of inherited shares on which he will receive the dividend income of 1950 during the tax year. Yes, so the dividend income is taxable as well. So what I'll do is I'll make this as a non-saving column and I'll make a dividend column separately and I'll write dividend, that is 1950. However, as I know that he will not be subject to any tax because the dividend amounts are below 2000 nil rate band. So total will be, I'll apply the sum formula rather than calculating myself. Copy the same formula here. Less personal allowance. So guys, will he be entitled to personal allowance? No, because his income is way above 125,000. He will not be allowed or entitled to any personal allowance. So this will be his taxable income as well. That is this income and this income. Now let's apply the bands, his normal band would have been 37,500, but now he has made gross contributions of 100,000. I will increase his band by 100,000. So his new band will be, rather than 37,500, it will be 137,500. Will be taxed at 20%. So 137,500 times 20%. This is the tax calculation of non-saving. I can also separate this as well. So non-saving. Now, the remaining income that is left will be the difference between the 137,500 and this income. So guys, his higher band will also would have been increased to 100,000. So what will be his new higher rate band? You tell me guys. But I want to ask a question here. Basic rate band gets increased by this amount. Will the higher rate band will be increased by this amount or not? So what will be the new higher rate band? The higher rate band normally is the difference between the basic and the higher, that is 37,500 minus 150,000. This is the difference of basic rate band. So it remains the same because next 112,500 income will be subject to the basic rate band, because when your band increases, the difference between both bands remains the same. Do remember this tricky point. If your basic rate band increases and your higher band increases as well, so the difference between the both remains the same. So what you have to do is just take the difference and remember that this figure will remain same. 112,500 will remain same. So just apply the tax on 11250 because your higher band would have been the same as well. So times by 40%. Now 112,500 times 40%. 45,000. Now I have to see that how much amount is left for me that I have to charge an additional rate band pair. So for that it is easy. Here I can put the formula that out of my total amount, that is this 409,600, just deduct 137,500 that I have already used above, and also deduct 112,500 because remaining amount has not yet been taxed. It is 159,600. So 159,600 times 45%. So 159,600 times 45%. This is the total tax liability of the non-saving. Let's talk about dividend. Dividend, we know that 1,950 will be taxed at 0%. That is why 0. And I'll apply a sum formula to calculate my total tax liability till here. that is 144320. So guys, wanted to teach you few new things, that is how to calculate the bands when your bands increased by so much amount, and the incremental taxes that you have to calculate, that if one invests in this and this, because these are the type of questions that are normally being asked in more difficult manner in advanced taxation exam, and examiners are trying to bridge the gap between the taxation and advanced taxation exam. I hope it clarifies. With that, I would like to sum up today's session. If you guys have any question, I would like to answer in the last 5 minutes. Guys, if all of you can raise the hands who have find this session really helpful. I hope all of you have learned new things and new rules as well. And if few of the rules you are confused about, you now have clarity in your concepts. If you have any questions, you can ask here. Yes, Shazad, you're right. But the difference between the both will remain same, obviously 112500. Okay, guys, so I would like to sign off. Tomorrow's topic is obviously the corporation tax, which is very, very, very extremely important because one 35 mark question, one 15 mark question will definitely be gets tested in section C on that. So we'll be discussing 3 to 4 questions on that, and tomorrow will be our last day. I'll tell you some more tips and tricks in the last session as well. So the questions that I have selected for tomorrow are these: Solo, Ash, Wrench, and 10th 11 Limited. I'll try to solve these questions with you. Before signing off, I would like to tell you one more thing, that if you visit ACCA's website, on that, if you visit taxation as a paper or in the study resources section, there's a section called question practice, not question practice UK. One is question practice UK ACCA platform. I'm not talking about that. It is question practice variants. So click on that. When you click on that, select your variant, that is UK. There'll be certain past papers that are available in the CBE format. From September 16 till December 19, all of the past papers are available in CBE format. However, they are not been updated to the Finance Act. Their answers can be found here as well. If you click on that, a PDF document will be downloaded and you can find their answers there as well. But I'll do recommend you to attempt certain questions from here as well, just to get an idea. There you can find the answers. For example, we have just solved Kagan. So this was a question that was from September December 19, but you can see that it is not updated with Finance Act 2020. So if you click on that, obviously a new window will open that will take you to the exam practice platform. So guys, with that, I'll sign off. I'll wish all of you best of luck and I hope to see you tomorrow. Till then, take care. Bye bye.